This is one of the biggest problems with trading that most people don't understand. You win in volume, and individual results are irrelevant. The aggregate results are everything. The system that works 30% of the time is extraordinarily powerful if you execute it 100 times. The same system, though, that you execute 3 times could look like it doesn't work at all. Most people abandon the system at rep 3. You have to trade. If your trade frequency is really low, you're not going to get there. Psychological framing. Psychological framing is the meaning that we give to something. One of the things that Van used to say, he would say that we're all meaning makers. So everything that we come across in our life, we get to choose what meaning we want to assign to it. Psychological framing is the proactive exercise of assigning meaning to different things in life. The meaning we assign creates the entire emotional experience, not the event itself. This is the foundational insight. The events are neutral, but our meaning is chosen. And meaning drives everything that follows. It drives the emotion, it drives the decisions, it drives the behaviors, and it drives the outcome. So we look at 2 paths with the same starting point. Scenario A is the avoidance path. We protect our ego. This also reinforces the belief that rejection is catastrophic. So we stay stuck with the same result, the same story, and the same limitation. As a result, our comfort zone shrinks over time. Now, scenario B, you take action repeatedly regardless of the outcome. You accept rejection as a natural part of the process. You build resilience and calibration through volume, and eventually you succeed because the math depends on it. The only variable separating these two futures is not talent. It is the frame applied to the possibility of rejection. The meaning that's assigned is the only difference. If you change the frame, you change the behavior. If you change the behavior, you change the result. When we look at the framing, not all frames are created equal. Most people operate at level 1 without realizing it. Level 1 is rejection equals failure. It means that something is wrong with me, and I should avoid situations where this can happen. This absolutely reinforces not trading. But if we flip it to rejection is just part of the process and I expect it, it doesn't mean anything about my worth, it's just data. Now the frame is supporting me rather than inhibiting me. And we can take that to an elite frame that might say every rejection means I'm now statistically closer to success. The elite frame doesn't just tolerate rejection, it weaponizes it. Every no becomes fuel. Every setback becomes forward momentum. This is the operating system of high performers. I have a losing trade. Awesome. I'm going to get a lesson from this that makes me better. This is where the framing concept deepens into something more powerful. The recognition that certain systems are designed to work through volume, not perfection. This is one of the biggest problems with trading that most people don't understand. You win in volume. They require many attempts to succeed. They do not eliminate failure, they utilize it. And individual results are irrelevant. The aggregate results are everything. The system that works 30% of the time is extraordinarily powerful if you execute it 100 times. The same system, though, that you execute 3 times could look like it doesn't work at all. Most people abandon the system at rep 3. You have to trade. If your trade frequency is really low, you're not going to get there. Dating, the action's approaching someone, and trading, it's entering a trade. The inevitable outcome, in dating, it's rejection, and trading, it's a loss. The required response is to repeat without resetting, and the long-term result is success through volume. The structure is identical. I want to talk about a real example. We looked at the trades. We were maximize profitability through a window of time. And we set an expiration. So you start to go through here and you start seeing 20, 30, 40R winners, that the service is walking away with a 3R win. What's the problem? The problem is the psychological frame. At expiration, when the trade's a 3R winner, the mindset, what's going through is like, well, that trade was good, but if these signals have higher time frame alignment, good, they're fundamentally strong. So it's a very strong technical pattern. They have the possibility of working for a very long time. So because it was initiated and underlying, it psychologically framed it easier to uphold it. Same entry, same risk point, same date, different frames. And the different frames lead to a big difference in performance. Van Tharp would teach all these different position sizing models. One of the models that he taught was called the core equity model, that whenever you start a position size for a trade, you remove that money from your capital. You've already booked it as a full loss. How that change how you manage a trade if you already know it's a full loss? There's nowhere to go but up. Biggest issue I see with traders is taking profits too soon. If it's already booked as a loss, you can't have no profits to take. You can let it run. We're literally just changing the meaning we're giving to the trade, and it changes our behavior and how we act. The things that you do in your plans, you have meaning you've attached to them. And the question is that if you go look at what your rules are and you examine the meanings of them, you can reframe things differently. If you change the frame, you change the behavior. If you change the behavior, you change the result.